ऑल राइट, वेलकम एवरीवन। बहुत ही इंटरेस्टिंग एपिसोड है क्योंकि एक ऐसा टॉपिक आज हम डिस्कस करने वाले हैं जो कि हर कोई लाइफ में एनकाउंटर करेगा ही करेगा। एंड बहुत लोग अभी मतलब आप लोग ऑफ कोर्स ये टॉपिक पढ़ के इस वीडियो पे क्लिक किया होगा एंड यू विल बी वाचिंग दिस, बट एंड दैट्स व्हाई इट्स सो इंटरेस्टिंग। द टॉपिक टुडे इज प्लानिंग फॉर योर रिटायरमेंट, द रिटायरमेंट फंड। एंड इंटरेस्टिंगली बीएनपी पारिबास का रिटायरमेंट फंड भी आया है, तो वील गेट some insights on that fund as well. हु इज इट फॉर, क्या है, कैसे है, एंड उसके अलावा बहुत सारी चीजें रिटायरमेंट प्लानिंग के लिए विल ट्राई टू डिस्कस। मेरे साथ ऑफ कोर्स द वन एंड ओनली मिस्टर सुरेश सोनी, सीईओ ऑफ बड़ौदा बीएनपी पारिबास। Sir, thank you first of all for making time for us and helping us understand this journey in the markets and how to plan for our retirement.
Thank you. Delight talking to you, and thanks for having me on the show.
Thank you so much, sir. Sir, I'll get right to the meat of the topic. Uh, my first question to you is, how should one go about planning for their retirement? As well as that.
Sure. Look, I think taxes, death, and retirement or old age all are inevitable, and you need to plan for all of them. So, when you're thinking about retirement, it's essentially not only about the monetary aspect, which we'll cover, but it is also about societal aspect. It is how you want to spend your time. So, the good things about retirement is that you've got freedom of time. You can do what you wish. But at the same time, it can also be lonely sometimes because you do not have a routine anymore. And finally, the biggest issue that people encounter is they're underprepared for it, both mentally, physically, and financially. And few things which are changing in Indian society, and all of us can see, life expectancy is increasing. In 1960s, 70s, we average life expectancy was about 45 years. Now we are closer to 70 years. So we are living much longer and significant number of years beyond retirement. Second thing, the average life expectancy also tends to be higher in the higher economic strata. More educated, more economically well you are, longer is the life expectancy. And scientific advances are making us live longer, but then, of course, you need to pay for it. The second thing that is happening is also that a lot of people are now planning to have a different career sometimes. So while I'm working, but at some point of time, I want to become independent. And therefore, everybody has clearly a line of sight of being able to retire and being able to lead their life. Now, what was happening earlier is that either you were dependent on your previous generation, कि पापा कुछ पैसे छोड़ के जाएंगे and I'll live off it, or you are dependent on your next generation that kids will take care of me. Unfortunately, increasingly, that is happening less and less. We are becoming more nuclear families. The social support system that came in is no longer there. And at the same time, most of us don't know whether we can depend on some inheritance or our next generation taking care of us. I think the primary responsibility of taking care of ourselves is on us. And therefore, one needs to really think about it and have a proper plan for retirement. When it comes to financing, you need to start planning well in time. You need to have a goal corpus in mind and then start preparing for it.
Absolutely. That's absolutely true, sir. My next question to you is, when to start plan. When should we start planning for that retirement? क्या सही age रहेगी उसके लिए?
Sure. You can't really wait till the last day. One of the things that has come out in all the retirement surveys that have been done around the country is that about 90% of people who are above the age of 50 really wish that they started planning earlier. So most often, about 90% of India is kind of starting too late for retirement. My belief is people in the age bracket of about 30 to 40 need to start thinking about it. When you're 25, you're thinking of your first job, you still have your first few goals like car or house, which is absolutely right for that. But somewhere around your mid 30s, could well be a time when you start keeping aside some money, because for money to multiply, for money to compound, you need to give it reasonable time. So let's say the retirement age for more people is most people is 56 years. You need to give at least 20 years for your money to grow. So that's why I would say somewhere between mid 30s to early 40s or something like that. That is the time that you should at least start thinking about it. If you could start earlier, even better.
Right, sir. Sir, one problem that at least I face is how to know what amount would be enough for me, given we have inflation concerns almost every day in the newspaper. So, right now, let's say my expense is a certain amount, and I don't, it's really difficult for me to say ki what is the amount that would be when I'm reaching, let's say, 60 or my retirement age. What would be my living expenses, and how do I plan for it?
Sure. So I think you need ideally some financial planner to help you work the numbers, because it tends to be a bit more customized, involved exercise. But if I have to take a very crude example, let's say your living expenditure today is about 50,000 rupees. Inflation in India mostly would be about 6-7%. So every 12 years, that amount will double. So after 25 years, you'll need 2 lakh rupees a month. And if you really require 2 lakh rupees a month of income, interest rates are usually about 6-7%,
Yeah,
then you need about 4 crore rupees with you
yeah,
to be able to get that kind of money. Now, 4
right.
crore rupees does sound a lot of money, but if you have to prepare for it, then you need to start saving right away, and you need to kind of put it in instruments which at least compound your money at about somewhere in the early teens, if not more, so that over a period of time, your money grows, you have enough money available to you, and therefore you're able to live.
Right. Which is my next question. So you said ki, how do I go about building this portfolio which gives me, like you said, returns in early teens at least?
So one of the challenges that we have seen in India, I think, is there are two issues that we do when it comes to retirement. One, we don't start planning early. And second, even when people plan, they put in instruments which give relatively low return.
Yeah.
For example, all of us see a lot of money going into public provident fund.
Mm.
It's a great avenue, but at the same time, you're putting your money away for 17 years,
Yeah.
and the return is about 7%.
Mm.
So it's a good risk diversifier, but is it going to create a huge amount of wealth for you? Probably not.
Mm.
If you have a time horizon of say, 15 years, you can probably compound your money much better by putting into the markets, putting some money, some part of this money into equities or retirement fund, which take exposure to equities and then give you a good return. Or else I see a lot of us buying very long-term life insurance policies. Again, if you really deconstruct it, the real return underneath in most of these policies tend to be about less than even the 7% that I spoke about, public to provident fund. It's more like 5 to 6, 6.5%.
Right.
Now, at that return, it doesn't make a huge impact on your retirement corpus. So when you're trying to save for retirement, one is to choose the right asset class. What's the right asset class? It has to be a combination of equity and fixed income that allows you money to compound. So over a period of time, if you put your money into instruments that give you, let's say, early teen returns or mid teen returns, you would reach your retirement goal much faster than your money lying in 7%. So just to put some numbers in context, your money doubles in a bank deposit in 12 years. If you're growing at 7%, about 10 to 11 years, what it will take. Rule of 72, you divide 72 by 7, it will take more than 10 years. But if your money is growing at about 14%, you double it in 5 years. So in 10 years, you actually have 4 times. So the difference really widens as your time horizon increases.
Right.
So two things. One, start early. And second, take an asset class which gives you a good return as opposed to just moderate return that a lot of other asset classes give.
Right. Absolutely. So, getting a little deeper into this, what do you think is the ideal, mix of retirement portfolio?
Sure. So I think we thought about it, and what occurred to us is that the investors need to be able to grow their money, but also we don't want them to be exposed completely to vagaries of equity market. And therefore, in our fund, when we are thinking about what should be the ideal asset allocation, we came up with this hybrid plan, which puts about 65 to 70% of the money into equities and about 30-35% into fixed income. So that way you get almost bulk of the upside of equity market, but also you are somewhat protected in a bad market because about 30-35% fixed income continues to grow even in a bear market. So that to our mind is a good combination which will work for about 90% of the people. If you are, however, very aggressive risk taker, then you can probably allocate some more money to equity funds. Or if you are very defensive, then of course you can put some more money into debt funds in order to balance it. But for majority of the people, this will meet their objective of growing their money as well as keeping it somewhat protected. The
That
reason why I would not want a hugely conservative portfolio is because the retirement years are also fairly long. Let's
right,
remember that when you retire at 58 or 56, you still have a good 15, 20, 25, 30 years ahead of you.
right, right. Absolutely. That sounds absolutely fantastic, sir. Can you tell us some more unique features of this fund that we're talking about, the Baroda BNP Paribas Retirement Fund?
Sure. Um, so what we are looking to do is to come out with a product which we believe is long needed in the market, which is a big need for the country because as a country we lack social security. And this is something which is our effort to allow more and more people to go towards self being self-reliant or being atmanirbhar in their older years or in their olden age. So what we are looking to do here is to put money into 65 to 70% in equity and 35%, 35% into debt. This is a fund which is called retirement fund. It carries a certain amount of goal, which is towards retirement, and which is why this fund comes in with a lock-in of 5 years or 58 years of age, whichever is earlier. So let's say if you start investing in this fund at the age of about 35, you are free to withdraw it after 40, though we would like you to continue for the whole life because that allows you to build the corpus. But if you start investing in it at, let's say, 56, then you're bound only by 2 year lock-in because after 58, you can withdraw. The facility to withdraw after 58 is to give you the flexibility to manage your money in your retirement years. So the objective is to save, invest till the time of about 58, ideally, and then start withdrawing from it. The withdrawal, the ideal way that we again feel from these funds is to do something called a systematic withdrawal plan. What does that mean? So rather than taking a dividend which gets taxed at full tax rate, you can do actually a withdrawal using systematic withdrawal plan of a certain amount, which is maybe 0.5% to 1% of your retirement corpus. And rest of the money continues to compound for you. And whatever you redeem is again taxed like a capital gain and therefore lower rate of taxation.
Right,
So
sir.
it's a tax efficient vehicle. It's a very flexible vehicle. You determine what amount you want to put, for how long you want to put, and what's the withdrawal rate that you want. So use it as an effective tool to plan your finances.
Right, right. That sounds absolutely beautiful, sir. So my final question to you is, if you could, it may be a very general question, but if you can tell who exactly is this plan for, who should be the one that should be looking into building a corpus in this fund.
Anybody who wants to be Atmanirbhar, right? So if you don't believe that, or rather, if you don't want to be dependent on your children,
Right.
or don't want to just keep hoping that somebody leaves legacy for you,
Yeah.
this is for you to create your own retirement fund, so that in your golden years you are not running pillar to post, but you're able to enjoy the freedom that comes with retirement rather than having to worry about how to meet the bills.
Right.
The reality is you don't have any other sources of income in that age. And having to have this worry about finances when you are no longer able to work is something which can be very, very daunting, particularly when you have regular expenses, you have inflation, and you also encounter significant medical emergencies, or there could always be some unforeseen situations for which you need to provide. So it's important for everybody to create some retirement.
Awesome, awesome. Thank you so much once again, sir, for taking out time for us and helping navigate this journey of markets where we can become Atmanirbhar, like you said. Thank you so much, sir.
Thank you, Vishnu. Delight talking to you.
Please note that mutual fund investments are subject to market risks. Read all scheme-related documents carefully.